Hey guys, welcome back to the channel. In this week's video, we're going to take a look at the February competition. We're going to look at the top 3 traders and do an in-depth analysis into their account. But before we get into that, if you guys don't know, we host competitions here at The Funded Trader. If you go to our webpage, you'll see in the top that there's a competitions tab. If you go ahead and click that, you'll come to a page much like this. You'll be able to look at the old competitions and their standings and their rules. We have a lot of people that do sign up. In our first month that we did in January, we had over 3,000 people sign up. In February, we had over 8,000, and again in March, we have over 8,000. In the last week of the month, we start sign-ups. You'll get emails about it, or if you follow us on social media, we'll be posting about it. And you'll be able to sign up, and currently it's free of charge to do so. Now, if you do place in the competition in the top 20, you are going to win a prize, and if you place in the top 3, you will win a challenge account that you can then use and hopefully turn into a funded account upon passing. So first place is going to get a 200k standard challenge, second place will receive a 100k standard challenge, and third place will receive a 50k standard challenge. So now that we've covered that, let's get into the video. So now that we're here on the dashboard, we can see that in first place we had VIDI21 with a 111.9% return. CashMoneyC 404, great name by the way, 104.14% return, and Graham with 102.64% return. These guys did an amazing job, and as always, the data is here for you guys to see. So if you wanted to extract it into Excel just like I do, or I did rather, just go ahead and click on Graham's name or Cash Money's name or whoever's name you want to click on, or if you're here on the competition standings, you can go ahead and click on your name. And what I did is I just copy and pasted and threw it into Excel, and the format works perfectly fine. Just make sure the first time around you copy and paste these so that you have titles for each of your sections. Once you have your stuff in Excel, if you choose to do so, and you want to organize it chronologically, just go ahead and click this section with the dates. So you can click this one, and then go to Data, click Sort Sheet, and then you would just click column B, A to Z, if you wanted it from beginning to end, or if for some reason you wanted to have your most recent trades up top, you would just click Z to A. But now that we're done with our Excel tips, let's take a look at Graham's account. So Graham took a total of 73 trades, with 22 of them being winning and 51 of them being losing. So at first that sounds kind of bad, but not necessarily, because his average winning trade was $3,448.44, while his average losing trade was only $481.33. So that's giving him an average risk to reward ratio of about 1 to 7.16, which is outstanding. It takes him 7 losses to undo 1 win, which is, that's amazing. So his total P&L was a gain of $51,317.66. Yes, he started with a starting balance of $50,000, so just over 100% gain, 102.64. And his average win rate was 30.14, which is pretty good, given his risk-reward ratio. So good that he's more than doubled his break-even win rate. So when I say that his win rate was good, being 30%, well, his win rate is really good relative to his break-even win rate. Now, if his break-even win rate was, let's say, 30%, and his average win rate was 30%, well, then his win rate wouldn't be very good. But because it's double his break-even win rate, he has a very good win rate. So that's what I mean. It's good relative to his break-even. And whenever you're evaluating your own trades and your own win rate, you need to determine what your break-even win rate is and see what it is relative to it. And that's how you'll know if you have a strong win rate or not. and your win rate should also be good relative to your risk reward ratio. That way you're staying net positive. But let's go ahead and look at his instruments traded. So primarily he was focused on gold, and he took a lot of NAS 100 trades. He did mess around with some FX pairs and some crypto a little bit, but these all turned out to be unprofitable trades, which really drives home a point of, sticking with what you're comfortable with. Obviously he was comfortable with gold, he was comfortable with NAS 100, and so that's what the majority of his trading was. Did he try out other things? Sure he did, but he used relatively low risk to do it. Look, only a loss of $12, $16, $63, $84. That's basically nothing compared to his average losing trade of 481. So on these trades, he was using low risk, probably because he wasn't super familiar with trading these instruments profitably, which, this is a great example of what you should do when it comes to risk management. So now let's go through this chart here and see what kind of lot sizes he was putting down on gold and see if they were consistent. So if we look here, we got a bunch of 2.5s, we got some 3s, some 2.5s, 1.75. So these are all around the same range. And if we continue down, we're going to see these things again. Let me make this a little easier on the eyes for you guys. So we're going to just do Control F and type in XAU USD. And so all these are going to light up. So we're going to look at the lot sizes next to the highlighted ones, and it'll be a little easier for you guys to see. All right, so, everything is looking pretty consistent between a range of 1.5 and 4, sometimes varying. And so we even dip below that sometimes. And yes, so he stayed pretty consistent across gold. Now let's check out his NAS 100 trades. NAS 100. All right, so if we look here, we have a 0.73, a 0.07. I'm going to assume, because this one is such a low profit, that he didn't mean to enter into a 0.73, because he saw how fast the balance started changing, and he looked to close it as soon as it got to break even or just a tiny bit in profit, and then he went in for his actual entry here, and that kind of stays consistent throughout. So I think he was unfamiliar with the lot sizing on this first entry, and that's why that shows us an irregularity. As we continue down, yeah, the lot sizing for NAS is pretty consistent all throughout. And then here he had 2 big trades on NAS. What I'm going to assume for this is he saw that he wasn't going to finish in top 3 and decided that he didn't want a coupon, so he was going to go big or go home. And it looks like this worked out for him in the end. A quick $16,000 profit to get him into the 3rd place. Respect the strategy, and definitely worked. So now let's take a look at our next account. So we have CashMoneyC. He had a total of 140 trades, with 47 of them being winning and 93 being losing. Cumulative P&L of about $51,701. His average winning trade, $1,604.68. And his average losing trade was about $255.04, giving him an average risk-reward ratio of 1 to 6.29. Not as good as Graham's. However, his average losing trade is much smaller, so that's why their average risk-reward ratios are very similar. So even though these numbers are slightly deflated than Graham's, his risk-reward ratio still remains strong. His break-even win rate is a 13.71, and obviously he's more than doubled his break-even win rate with an average win rate of 33.57. Truly impressive, to say the least. Now let's take a look at his instruments traded. So he had 5 trades on EJ, totaling gains of $56,931. So majority of his money was made on EJ. NAS 100, he made 91 trades on there, and his cumulative gain for that was $3,746.87. And USD SGD, I believe this is the Singapore dollar. He made a couple trades on here, and they didn't really go well. And so the rest of these pairs, he didn't really do too well on them. He kind of traded them a little bit, but he quickly gave up on them as they weren't super profitable for him. So let's take a look at his EJ trades. Let's go ahead and do Control F if you want to find things on the sheet. You go ahead and use that keyboard shortcut, and we're gonna look at Euro JPY. So Euro JPY, his first two trades were a 20 lot and a 20 lot, where he made over 100% right there. So he probably would have done better if he just called it quits after these two trades, because he went and lost all this money afterwards. And the trades that he made that were profitable after these two big trades, they really didn't make up for all of those losses. So this is an example of a guy who just made some really good trades up front and was able to ride that throughout the competition. So, I mean, good for him for doing that. This is not really a good example of what I would call good risk management. These are some huge lot sizes relative to the account. For a 20 lot, let's see, that is a $2 million position. Yeah, that's a $2 million position right here, since the contracts are $100,000 each. And it looks like he was in two of them at the same time, so he had a $4 million position open on a $50,000 account. This is not proper risk management, and I think the trades that he went in to do proper risk on, they didn't end up going so well. So can you get lucky in the Forex game? Absolutely, you can get lucky. I think he got lucky here in the beginning. Now, were his trades based on a solid analysis? Most likely, yes. But what are the probabilities of him winning those trades? Well, we can see that it's 33% overall. So he had a 1 in 3 chance to make it on the first trade, and a 1 in 3 chance to make it on the second. He was fortunate enough to do it, and so that's why he's in second place. I'm not going to cover this one too much, mostly because it's not a really good example of the kind of behavior that we're looking for from our traders here at the Funded Trader. We're looking for guys more like Graham, staying consistent and, really honing in on that strategy and, doing what's statistically possible over a long period of time to provide consistent gains. What we're not looking for is giant lot sizes to bring in massive gains that are not sustainable. Moving on to the winner of the competition, we have Vidi21. So Vidi21 did an outstanding job. He came in first place, obviously. And so he took 45 trades in total, had 30 of them being winning and 15 of them being losing. So he's the only one in the top 3 that had a win rate above 50%, more wins than losses. And he also maintained a risk-to-reward ratio of 1 to 6.42, which is also very impressive. He had a P&L of over $55,000, so it was over 100% of his initial account balance that he was able to gain on his account. Average winning trades sitting just above $2,000, and his average losing is sitting just above $300. So that's also really good. Average win rate of about 66.67%, and a break-even win rate of 13.47%. So his win rate relative to his break-even win rate, truly outstanding. He did a really good job as far as his, establishing a high risk-to-reward ratio. So majority of his trades were done on US 30. Let's go ahead and look at his US 30 trades and the lot size. So these lot sizes are kind of big for the account, but it depends on how tight his stop losses are. So he gained about about 32,000 right here, and then another 8,000 that's putting him at 40, and then 43,000. So from the first 4 trades, he was up almost 100%. He then lowered his risk and switched to trading currency. So here on GU, we see that his lot sizes are about 5 lots, and so he's making about $50 a pip, and he made about $650. So that's about 13 pips that he made. So these are really just a bunch of scalps that he was doing on GU, and he was pretty successful with it. I see he tried to scalp some Bitcoin afterwards. Didn't have too good of a luck with that. Came back to GU, another successful scalp. For this one, I guess he decided to lower his lot size, took a little bit of a loss, and then took some more losses over here. But overall, majority of his money was made up here, and he did do some scalping afterwards. So again, even though he came in first place, I wouldn't recommend this way of trading, just because you're bearing a lot of the risk up front. And I know if this was a challenge account, someone wouldn't do this. I think this is mostly because the entering into the competition is free, so you have the opportunity to just make a ton of money, or make a ton of paper money, and get on the leaderboard for taking big risks. But it just goes to show that Graham, although he came in third place, he was really, really consistent overall. And that's really what you want to strive for, because this is longevity over here. Graham's trading style, this is longevity. It's, even distribution of lot sizes, consistent returns. CashMoneyC really wasn't the same kind of thing. And 5021 really wasn't the same kind of thing. They made most of the money up front, and then I guess they were trying to keep the accounts active over here. So that's a little disappointing to see, and I would like to see more people like Graham placing higher in the competition, just because that's the kind of trading that's going to go far. So I believe Graham is going to do really, really well with his 50K challenge account, and who knows, like maybe Vidi21 and CashMoneyC will do really well as well, and they were just trying to play the odds. But that is going to conclude the analysis for the February competition review. If you guys enjoy these kind of videos, be sure to leave a comment in the description about it. I saw in the last video there was some feedback with the screen being a little bit blurry. I hope that's been corrected in this video, and I hope the audio is a little bit better. We're trying to improve our content here at The Funded Trader, and basically bring you guys as much value as we can. So with all that being said, I'll see you guys in the next video.